The global economy looks stable on the surface, but beneath it, a silent fracture is widening. For years, governments have borrowed more than they can repay, inflating bubbles that were never meant to last. Investors, blinded by rising stock prices, forgot that every bull market eventually meets its reckoning. The warnings are everywhere, yet no one wants to acknowledge them. Behind the scenes, the world's biggest financial institutions are quietly preparing for impact. In boardrooms, emergency meetings are being held under the cover of secrecy. Every analyst knows that the numbers are no longer adding up, but they keep the truth hidden. In households, the middle class senses that something is wrong, but can't explain it. Savings are shrinking, debts are rising, and living costs are climbing faster than incomes. This is how every crisis begins, with silence, denial, and the illusion of control. History shows that the most destructive collapses strike when people least expect them. And now, the same pattern that preceded the crashes of 1929, 2000, and 2008 has returned. The curve is inverting, liquidity is evaporating, and the global credit engine is stalling. Central banks are trapped between inflation and recession, unable to fix either one. The world is stepping into a zone of financial turbulence unlike anything seen before. The calm you feel today is not stability. It is the quiet before a devastating global storm. For millions around the world, the countdown has already begun. But the real question is not if the system will break, it's when. And the answer points to a moment that is far closer than anyone is prepared to accept. Throughout history, markets have whispered before they screamed, sending warnings long before collapse arrived. Economists call it the most reliable indicator ever discovered, a financial heartbeat that predicts catastrophe. It flashed before the Great Depression, before the dot-com collapse, and before the 2008 meltdown. Now, that same signal is triggering again, stronger and faster than before. It is the yield curve, a simple but powerful chart that reveals the future of money. When short-term debt costs more than long-term debt, the system is officially upside down. This inversion means confidence is collapsing, trust is broken, and investors fear the future. Every time this happens, without exception, a recession has followed. But this time, the data is far more extreme, pointing to something deeper than a recession. Trillions in corporate debt are set to roll over at higher interest rates they cannot afford. Banks are tightening lending, protecting themselves instead of serving the economy. Major hedge funds are quietly repositioning, shifting out of risk before the public notices. The world's biggest asset managers are warning clients, but only behind closed doors. Because if the truth were spoken loudly, markets would implode overnight. The curve is not just inverted. It is collapsing in ways never seen in modern history. This is the signal that never lies, the sign that precedes all major economic earthquakes. And once it begins, the countdown accelerates with terrifying speed. The world is staring at a crisis that is mathematically unavoidable. Every financial collapse follows the same 5 stages, repeating like a script written into the bones of history. The first stage is euphoria, when people believe the market can only rise. Money is cheap, risk is ignored, and confidence becomes a dangerous illusion. The second stage is complacency, when warnings are dismissed as negativity. Investors believe they are smarter than the system, and governments believe they can control the cycle. Stage 3 is stress, when cracks begin to show. Small bankruptcies, tightening liquidity, falling confidence. Companies struggle, households weaken, and the debt load becomes unbearable. Stage 4 is panic, the moment when fear spreads faster than information. Prices plunge, markets freeze, and investors rush to exit all at once. Stage 5 is capitulation, when everything breaks. Markets crash, banks fail, and governments step in too late. The economy enters a new era, harsher, slower, and far more unequal than before. Today, in 2025, the world is firmly between stress and panic. Debt is suffocating economies from inside, Yet governments continue printing money to stay alive. The middle class, once the backbone of stability, is being crushed under rising costs. Families can't buy homes, can't save, and can't escape the debt trap. This is how collapse truly begins. Quietly, gradually, then suddenly. Every expert watching the data knows something unprecedented is forming. The timeline points to 2027, the year when the global debt cycle resets. By then, trillions in loans will mature, interest rates will peak, and governments will run out of options. The global financial system will face a wave of defaults too large to absorb. Corporations, unable to refinance, will collapse under the weight of their obligations. Stock markets will experience volatility not seen in nearly a century. Banks, already weakened by hidden losses, will struggle to maintain liquidity. Housing markets will suffer as mortgage payments soar far beyond incomes. Governments will print more money, but each new dollar will buy less than before. Inflation will return in waves, each one more unpredictable and destabilizing. International trade will fragment as nations prioritize survival over cooperation. New alliances will form, replacing old systems that dominated for decades. This is not just a recession, it is the beginning of a global restructuring. The world will look different after 2027. New currencies, new power blocks, new economic rules. And the shock waves will reshape everything: employment, savings, investments, and national wealth. It will not be the end of the world, but it will be the end of the world as we know it. Every collapse creates winners and losers. And the real question is, who will rise from the ruins? History shows that after every crisis, a new economic order emerges. After 1929 came the New Deal. After 1945 came the Bretton Woods system. After 2008 came the era of cheap money and digital assets. After 2027, something entirely new will take shape. Nations with strong commodities will gain power. Currencies backed by real value, gold, energy, metals, will dominate. Digital assets will become central to global trade, replacing some traditional banking systems. The dollar will remain important, but no longer uncontested. BRICS nations will form stronger financial alliances, challenging Western dominance openly. Innovation will accelerate as the old models collapse under their own weight. And individuals who understand the cycle will safeguard their future while others panic. The world will not be destroyed. It will be reshaped. A new order will rise from the ashes of the old system. But for now, we are standing on the edge of the cliff, waiting for the moment gravity takes over. The future belongs to those who prepare before the fall, not after. Behind closed doors, in conference rooms sealed from public view, the world's most powerful bankers gather. These are not televised events or public briefings. These are crisis councils. Here, the brightest economists debate scenarios that governments refuse to acknowledge. They know the numbers better than anyone. The system is mathematically impossible to sustain. Debt is rising faster than growth, interest is compounding faster than income, and spending is outpacing reality. One executive from a major US bank whispers, "We are preparing for the worst liquidity freeze since 2008. Another, from a European lender, warns, "Our exposure is larger than we reported." No one in these rooms speaks about recovery, only survival, restructuring, and controlled collapse. Documents labeled confidential outline projections for unemployment, bank failures, and currency volatility. Global funds are shifting capital into commodities, bonds, and precious metals, quietly, strategically. The public is unaware, misled by headlines that claim markets are stabilizing. But the truth is that stabilization is just another illusion created to avoid mass panic. These hidden councils are not planning how to prevent the collapse, they are planning how to navigate it. History shows that when elites prepare for impact, the rest of the world pays the price. And now, they are preparing harder and faster than ever. Every economic collapse begins with markets, but ends with people. The first signs appear in the most vulnerable households: rising debt, missed payments, delayed bills. Families cut back on groceries, utilities, transportation, not out of discipline, but necessity. Children feel the tension even if they don't understand it, hearing parents whisper about money at night. Small businesses, already on thin margins, struggle as customers disappear. Local shops close one by one, leaving empty streets and silent markets. Wages stagnate while expenses rise, an invisible tax that drains hope from the middle class. The wealthy shift assets and diversify globally, but ordinary workers have nowhere to run. Inflation shatters savings that took years to build. Homes become unaffordable, rents skyrocket, and mortgage rates suffocate financial dreams. People begin taking second jobs, then third, sacrificing rest and family time just to stay afloat. Mental health deteriorates, stress rises, and financial anxiety becomes a silent epidemic. This is not the part of the crash the news shows, but it is the part that hurts the most. Because while markets recover, many families never do. This is the human cost of a system built on fragile promises and temporary illusions. Beyond traditional banks lies a hidden empire of finance, known as the shadow banking system. Hedge funds, money market funds, private lenders, institutions outside government control. They hold trillions in risky assets, unregulated, unmonitored, and dangerously leveraged. When markets shake, these shadow giants move first, and their movements determine everything. A single collapse in this sector could freeze global credit in days. Derivatives worth more than the world's GDP hang like a sword over the global economy. These complex financial weapons were the same tools that detonated the 2008 crisis. But now, the scale is exponentially larger, and the world is far more interconnected. A failure in New York could paralyze Europe. A default in China could cripple US banks. A liquidity crisis in London could ripple across Asia within hours. Regulators know the risks, but the system has grown too large, too fast, too unstable to control. This is the hidden monster beneath the global economy, unseen, unpredictable, and uncontainable. If it collapses, it will drag the entire financial system down with it. Unlike previous crashes, the next collapse will not unfold over weeks. It will unfold in minutes. Algorithms now control more than 70% of global trading volume. When fear begins, these algorithms will react instantly, selling faster than humans can blink. A single shock could send markets into a death spiral before regulators even wake up. Social media will accelerate panic, spreading rumors and fear globally in seconds. Millions will see the same alarming graph, the same flashing headline, at the same moment. Digital bank runs, powered by smartphones, could drain accounts in hours, not days. Apps will show crashing balances in real time, triggering more withdrawals, more fear, more chaos. This is not a traditional crisis. This is a hyper-connected collapse. Technology has made markets smarter, but also far more fragile. The same tools that created the boom will amplify the bust. And once the digital dominoes begin falling, there will be no way to stop them. Every financial collapse reshapes global power, and the 2027 crash will be no different. The United States will face internal pressure as debt reaches unimaginable levels. China will seize opportunities to expand influence through digital currencies and strategic trade deals. India will emerge as a central manufacturing hub, attracting industries fleeing unstable economies. Russia and Middle Eastern nations will leverage commodities to strengthen political alliances. Europe, fragmented by energy challenges and internal divisions, will attempt to maintain stability but struggle. BRICS nations will rise, building a parallel economic system that challenges Western dominance. The world will become more regional, less globalized, and more divided. Currency blocks will form, each with its own rules and power structures. The US dollar will remain significant, but no longer the unquestioned global leader. A multipolar financial world will emerge, competitive, volatile, and unpredictable. This shift will define the next century of global economics. Crashes destroy wealth, but they also create opportunity. During every collapse, the greatest transfer of assets occurs. Those who panic lose everything. Those who prepare rise to heights they never imagined. In 1929, fortunes were built from the ruins of bankrupt companies. In 2008, investors who bought at the bottom became millionaires within a decade. After 2027, history will repeat with even greater force. Real estate will collapse, then slowly rise. Stocks will crash, then consolidate, then explode in value for those who stayed patient. New technologies will emerge as lifelines for a broken system. Artificial intelligence, blockchain, renewable infrastructure, and digitized finance will dominate the new economy. The poor will get poorer unless they adapt. The middle class will fight for survival unless they reinvent themselves. But those with courage, knowledge, and patience will rise. Because in every collapse lies a hidden doorway, the doorway to the next era of wealth. When the dust settles, the world will not return to the old system. A new chapter will begin, leaner, smarter, but also more divided. Governments will adopt stricter financial rules. Banks will be forced to reduce leverage, increasing stability but limiting growth. Digital currencies will integrate into everyday life, replacing traditional systems. Education, employment, savings, and retirement will all evolve. The global economy will be rebuilt from the ground up. People will relearn frugality, discipline, long-term planning, and risk awareness. Trust will slowly return, but it will never be what it once was. The collapse will become a story told to future generations, a warning, a lesson, a reminder. Humanity will recover, as it always does, but the memory will reshape the future. The signs are visible. The data is undeniable. The cycle is repeating. The world stands at the edge of a historic turning point. Some will watch the collapse happen. Some will be destroyed by it. And some will survive, even rise. Because the greatest power in any crisis is not money, not governments, not banks. It is preparation. The fall of the system is coming, but the future belongs to those who see the storm before it arrives.